In this module, we will look at an overview of the corporation tax in the UK. The tax relevant to companies as well as to unincorporated associations such as members' clubs but not to partnerships is corporation tax. This covers profits from taxable income such as trading profits and investment profits, except dividend income, which is taxed differently. Companies do not pay income tax or capital gains tax. The chargeable gains from a sale of an asset is taxed as part of the corporation tax. The tax is payable on profits of a UK resident company, even if the profit was made outside the UK. If the company is not based in the UK but operates in the UK, for example through an office or branch, known to HMRC as a permanent establishment, it will only have to pay corporation tax on any taxable profits arising from its UK activities. For corporation tax purposes, the year is called the financial year or fiscal year and runs from the 1st of April to the 31st of March. This is different from the tax year for individual taxpayers, which runs from the 6th of April to the 5th of April. Companies pay corporation tax on taxable profits for each corporation tax accounting period. A corporation tax accounting period is different from similar terms used by other HMRC tax areas, such as VAT accounting periods, or other government agencies such as Companies House accounting reference periods. Limited companies are required to submit annual accounts to Companies House, including a profit and loss account.